Hello, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 19th, 2025, and we're taking a close look at Intel Corporation, ticker Intel. There has been a whirlwind of activity and news in the semiconductor space, creating a lot of uncertainty for traders. Just yesterday, we saw reports from outlets like Fast Company highlighting that chip stocks, including Intel, were falling across the board due to growing fears of a potential AI bubble. This sentiment was echoed about a week ago when Seeking Alpha downgraded Intel's stock to a hold, suggesting its incredible recent rally might be overextended. However, the news isn't all negative. A Motley Fool article from early November pointed to some good news for Intel investors, highlighting its much smaller market cap compared to giants like NVIDIA. Speaking of competitors, the narrative is complex. MarketWatch reported that Citi designated AMD as a top chip, while simultaneously noting that NVIDIA's shine fades. Despite this, we also saw that billionaire investor Ken Griffin has been substantially increasing his holdings in NVIDIA, showing big money is still bullish on the sector's leader ahead of its key earnings report. For Intel specifically, Yahoo Finance noted the company has formed a strategic partnership with NVIDIA, but ongoing concerns about profitability have led some analysts to recommend avoiding the stock for now. It's a very mixed bag of news, so let's turn to the charts to see what story the price action is telling us. Looking at the daily chart for Intel over the past year, the story is one of extreme volatility and a massive reversal of fortune. We can see the stock carved out a 52-week low way down at $17.66 back on April 8th. From that spring bottom, Intel went on an absolutely spectacular rally, more than doubling in price over the next 6 months. The buying pressure was immense, culminating in a 52-week high of $42.48, which was hit just a few weeks ago on October 28th. However, since hitting that peak, the price has seen a very sharp and aggressive pullback. We've dropped nearly 20% from the highs, now trading around yesterday's closing price of $34.33. This recent decline aligns perfectly with the news reports about a potential AI bubble and analyst concerns that the rally had gotten ahead of itself. Let's zoom in on the price action from September onwards to get a better feel for this recent move. The rally truly gained momentum in mid-September, breaking out of a consolidation period around the $24 mark. Notice the significant increase in volume on big up days like September 25th and October 1st. This indicates strong institutional buying driving the price higher. The final leg of the rally in late October was almost vertical, a classic sign of market euphoria or a blow-off top. After peaking at $42.48, the reversal was swift. The key question for us now is whether this pullback is a healthy correction before the next leg up, or the start of a more significant downtrend. Looking at key levels, the first major area of resistance is, of course, the recent high around $42.50. Before that, we have a smaller resistance zone around $38 to $39, where the stock briefly paused before its final breakdown. On the support side, we are currently testing a very important area between $34 and $35. This level acted as resistance back in late September, and the principle of polarity suggests it should now act as support. If this level fails to hold, the next significant support zone doesn't appear until we get down to the $30 mark, which was a major consolidation area before the October breakout. Now let's switch over to the hourly chart to analyze the short-term trend more closely. Here, the downtrend from the late October high is crystal clear. We see a textbook series of lower highs and lower lows, which is the definition of a bearish trend. The price has been consistently rejected at each attempt to rally, showing that sellers have been in firm control for the past 3 weeks. The most recent leg down took us from around $38 to yesterday's low of $33.57. Currently, we are seeing a bit of a bounce and consolidation right on top of that key $34 support level we identified on the daily chart. For short-term traders, a break above the recent swing high, perhaps around the $36 level, could signal a potential short-term trend change. Conversely, a firm break below the recent low of $33.57 would be a very bearish signal, suggesting the next stop is that $30 support level. Finally, let's drill down to the 15-minute chart to see the intraday action from the last couple of sessions. Looking at yesterday, November 18th, the stock opened weak and sold off to that low of $33.57 in the first couple of hours of trading. However, buyers stepped in aggressively at that level, pushing the price all the way back up to close near the day's highs at $34.33. This created a daily candle with a long lower wick, known as a hammer, which is often a bullish reversal signal, indicating a rejection of lower prices. It shows that despite the bearish news, there is still demand for the stock at these levels. The price action today has been a quiet consolidation so far, holding above yesterday's lows. This sideways chop suggests the market is waiting for its next catalyst, which could very well be the upcoming earnings report from NVIDIA, a bellwether for the entire chip sector. So, to recap and look forward, let's pull back to the daily chart. The key price levels to watch are critical right now. Major resistance sits at the all-time high of $42.48, with minor resistance at the $38 to $39 zone. The battle is currently being fought at the pivotal support/resistance zone of $34 to $35. Below that, major support lies at $30, and the ultimate floor is the 52-week low near $17.66. Now for some unbiased predictions. I believe the bullish case has a slightly higher probability, let's say 60%, in the short term. This is because we are sitting on major support, and we saw a strong rejection of lower prices in yesterday's session. The likelihood of this scenario increases if we see a decisive break above $36 on strong volume, which could be triggered by positive sentiment from NVIDIA's earnings or a broader market rally. A successful bounce here would first target the $38 resistance level. The bearish case, which I'd place at 40% probability, hinges on the failure of this $34 support level. If the price breaks and closes below yesterday's low of $33.57, it would signal a continuation of the downtrend. This scenario would be reinforced by poor sector news or a general market downturn, with the next logical target being the $30 support zone. The main thing to watch for in the immediate future is how the market digests NVIDIA's earnings report, as it will likely cause a sympathy move across all chip stocks, including Intel. Always watch the volume to confirm any breakout or breakdown. And that's our in-depth look at Intel. Thank you for watching Explain the Charts. Please remember, this content is for informational and educational purposes only and should not be considered financial advice. Always conduct your own thorough research and consult with a professional financial advisor before making any investment decisions. Don't forget to like this video and subscribe to the channel for more chart breakdowns.